And now our top story. Canada lost 2,800 jobs in July, missing economists' estimates for a gain of 25,000 jobs. This is the second month in a row that Canada has lost jobs. The unemployment rate held steady, meanwhile, at 6.4%. That's the highest level in more than 2 years. Economists believe the job losses could support a rate cut by the Bank of Canada. To continue the discussion, let's bring in our featured guest of the morning. He's Paul Gardner, partner and portfolio manager at Avenue Investment Management. Paul, first of all, welcome to the show.
Great to be here as usual.
Let's just bring back that screen and we'll just summarize some of the data before we get going and get Paul's take on it. Here's a summary. Again, 2,800 jobs lost in the Canadian economy during July. Not for the first time, certainly. That was way at odds with expectations, which was for a gain of 25,000, according to the survey of economists by Bloomberg. The rate of unemployment held steady at 6.4%, did not increase to 6.5% as economists had expected. However, that's an elevated rate of unemployment. As often, beneath the numbers, you get a fascinating picture. There were 61,000 full-time jobs added to the Canadian economy during July. However, there were almost 64,000 part-time jobs lost. So you get the math, and that's where you get the net change of a decline of 2,800 jobs. And the very dramatic hiring spree in the public sector continued in July. Look at these numbers. Public sector jobs added 41,000 during the month of July. Private sector jobs lost 42,000. So Paul Gardner, what do you think?
So when you go into the details, it's what's really important is that last slide. Like, that's a cool or bearish kind of report, because once again, public's job hiring, which is at a frantic pace. I think it's up 200,000 from just a year ago. Mm-hmm. We collectively know the public service not only has hired more for needs for healthcare and services, but it's getting beyond kind of our budgetary stretch. So with private sector losing 40,000 jobs, I would say that's net bearish. And as well, on top of it, the wage increase that you didn't refer to is still sticky. It's still higher. Right. Considering all these immigrants and workers that came in over the last 2 years, and part-time workers and temp workers, you would think when you compare to, say, the U.S., we have a much higher, hotter kind of wage increase with lower, fundamentally good numbers for a robust employment number. On top of that, the youth unemployment really, which is kind of like a canary in the coal mine. Who do you fire first? And when the job market's tight, you hire a lot of young employees, and that's not happening. They actually went up 2 percentage points from, I think it was age 15 to 24, yeah. And even age 18 to 30 or something in that range, they went up as well, unemployment. So that's never great. So I would say that's a net negative report for the markets. And, I think that's why you're going to see accelerated Bank of Canada cuts, which will, help it to a little extent.
Here are some of the details that Paul's referred to. I should have mentioned wage growth at the start of the segment. It came in at 5.2%, so wages grew versus a year ago. Hourly wages paid to permanent employees up by 5.2%. That did come down from June's number of 5.6, but it was well ahead of what economists were expecting and well ahead of the rate of inflation.
Yeah, for sure. The point, right? And that's, you don't want to see that. Eventually, without getting political, there's got to be a restructuring of the economy. There's just too much public service, too much deficit, and too much employment in that area, and we're going to have to kind of resize everyone. It's just, you can't keep doing this. It's not sustainable, and you need to power the private markets to hire more, and it's certainly not desperate, and it's a report that's on the weaker side, but it's not devastating. But you can feel that, and you and everyone's talked about productivity issues in this country, and we're lagging. We have very little GDP growth over the last 2 years, and it's kind of shocking considering what we have to offer as an economy that's actually fully engaged in a sense.